Hi, Lenore here, and we're ready to start the statement of cash flow. We have all the pieces. So as I said earlier, we're working on the indirect method, so we're going to begin with net income. And we calculated that earlier using, actually it was given to us. So net income is 116. So let's put that there, 116. The next thing we're going to do is add depreciation expense. And remember, this is depreciation expense, not accumulated depreciation. And we calculated that over here, so that is 13. We're also going to add the gain on the disposal. And remember, if it's a gain, it affects the statement of cash flows as a reduction. So our gain is right here, so that will be a reduction of 14. So we have our net income, our depreciation expense, and our gain on disposal. The next items we're going to work with are the current assets. So we'll start with accounts receivable. We have a decrease of accounts receivable. Whoops. So a lot of students ask me, do I have to put in the increase or decrease? And I always tell them it's not required, certainly not for the final, but I have found that it makes it easier if you end up with an error. So we have a decrease in accounts receivable of 1,000. And remember, it affects the cash flow as an increase. And we have a decrease on the balance sheet for inventories, and that also affects the statement of cash flows as an increase. So now we've completed our current assets, and we're going to work with our current liabilities. Let's see, increase, accounts payable. That's 4. So an increase in a liability will result in an increase on the cash flow. Next item is accrued liabilities. And that's a decrease. And a decrease with the liability affects the statement of cash flow as a reduction or a decrease in cash. Then we have income tax. And that also is a decrease. It's a decrease of $1,000. So now we have all our operating activity. Now we're going to net this. If I can spell. Let's hold on to it with a holding line because we're going to use this a little later. So we're going to net all those, and it comes to 117,000. Okay, so we have our operating. Now we're going to put in our investing activity. And remember, I said that was all the activity for property, plant, and equipment. So here's property, plant, and equipment. So we have purchases of 94. And if we purchase something, it's a reduction to the statement of cash flows. And then we have this cash received from the long-term asset, also known as proceeds. So we'll put that in there. Cash received from equipment. Well, it's not all going to come out. Oh, maybe. I'll just increase this. There we go. And since it's cash received, that means it affects the cash flow by showing an increase in cash. So we're done with those two items. Now we're going to net them. So this is cash from investing activity. So the investing activity and the financing activity, both of these are smaller in comparison, or less lines, less items, in comparison to the operating. So the next piece is financing activity. And as I said, that's long-term liabilities and equity. The first item is a decrease in bonds payable, which is a pay down or a retirement. So let's call it a retirement of bonds payable. And that means cash was reduced. The company actually had issued bonds earlier to investor, and now they're retiring those bonds by paying for them. The next piece is our equity. So this is an issuance of common stock, and that's $1,000. And the last piece is our cash dividend. So we're going to put that in here, dividend paid, and that's a reduction to the statement of cash flows. So cash from financing. I'm going to net this dollar amount as well, these dollar amounts. So cash from operating is 117, cash from investing is a reduction of 74, and cash from financing also is a reduction, but this one's of 42. So what we're going to do now is net those three. So we have our operating, our investing, and our financing. And that, my friends, represents an increase in cash. So see how we netted these three? Let me highlight them for you. Put them in a different color. Let's put them in red so we see them. So total operating, total investing, and total financing results in an increase in cash of $1,000, which is the same as the change on the balance sheet from 22 at the beginning of the year to 23 at the end of the year. So this right here is the gateway. If this doesn't equal the change in cash on your balance sheet, you've done something wrong. So to the increase in cash, we add the cash beginning balance, which we get from our balance sheet, 22, and we add those two together now, and those two added together will give us the cash ending balance, 23. And as you can see, 23 is our cash ending balance. So with the statement of cash flows, you know the answer before you begin. What do I mean by that? We know that our statement of cash flow must end at 23, which corresponds with the ending balance of cash. We also know that these three, operating, investing, and financing, have to equal the change on our balance sheet or the difference between beginning and ending for the cash account. So this is your gateway. If these three items, operating, investing, and financing, don't add up to the change in cash, then something has gone wrong. But hopefully nothing will go wrong. And this is an example of your statement of cash flows. So hopefully you realize that doing all your prep work makes it easier when you want to create your statement of cash flows. So the statement isn't difficult. Generally, students get a little tangled in the prep work. So with that said, Lenore out.